Boris Johnson will be hoping his early election will prove more conclusive than Spain's. His Conservative Party ramped up its attacks on Labour, claiming the opposition party would spend £1.2 trillion over 5 years, risking the UK's economic stability.
These are eye-watering levels of spending. 1.2 trillion. Well, it will be absolutely reckless and will leave this country with an economic crisis within months, not years, within months.
Eimear Daly, EMEA FX strategist from Macquarie, is still with us. Eimear, what's your take on the pound right now? Would you be going quite aggressively long sterling?
So I think a lot of it has already been in the price. We've seen, markets very aggressively price out no-deal Brexit on kind of the launch towards a early general election, and also because there's a lot of hope that it will be Boris Johnson to form a majority government. So we'll be a little bit cautious. We see two massive risks to this. First is that he's forced to form coalition government either with the DUP or with the Brexit Party, which would put no-deal Brexit back on the table. And second is that we might just be swapping no-deal Brexit risk for no FTA agreement risk. So effectively, he has said that he wants to get a free trade agreement by December 2020 and leave the transition period at that time. However, if he doesn't, we have it's in a sense no deal anyway. We don't have an agreement to fall back on.
Eimear, what is the biggest risk to sterling? Hard Brexit back on the table, perhaps a harder form of Brexit with an emboldened Tory party, or a hard Brexit in the form of the trade talks falling apart next year between the UK and the EU?
I think kind of for your instant market reaction, I think it's if it's a minority Tory government and they're forced to form a coalition government with either the DUP or the Brexit Party. I think that's kind of your clearest scenario towards a no-deal Brexit. Even if you got a Labour minority government, you could still get a no-deal possibility, but I think kind of the clearest indication would be a minority Tory government.
What's your take on where the Bank of England goes from here? It was a fairly downbeat sort of news conference from Mark Carney, and of course going into it there were a number of people in the market saying that we would expect, or that we should expect, rate cuts in 2020. Are you bracing yourself for rate cuts from the Bank of England?
I definitely think they're a possibility that's on the table. It's something we've kind of called for a while. We see a lot of expectation in the markets in terms of other G10 central banks easing. I think it's kind of, the UK actually, faces a tightening of financial conditions just by starting alone if it doesn't follow suit. So certainly you saw a lot of commentary about reinforcing the recovery, about kind of stabilizing growth. And I think that's basically talk for easing. So we'll definitely be looking for rate cuts to come.
Eimear, how quickly do we get to 0% in the UK? What needs to happen to get us to 0% in the UK?
We're definitely still a long way from 0%. I guess, at the start we'll be looking for a 25 basis point cut. I think it would take a lot to drive us to 0% and potentially a no-deal Brexit if they felt necessary to reinforce the economy that way.